Welcome to our webinar this morning, Strategies to Avoid Financial Stress in 2021. This is actually the first of a series of 6 webinars that we're doing in conjunction with Small Business Month in New South Wales, which is running through October. So this one obviously not quite to the end of September yet. So this is quite a topical I guess, presentation, particularly for our clients. There's lots of different things happening in the economy at the moment, and we thought that it was a good opportunity to kick this topic off as the lead topic in our series. So today I'm joined by Garry Pinch and Nick Fitzgerald, both directors at Accounting Professionals, and Nick and Garry both work in the advisory division of our business. So we're lucky to have them on board today. I guess before we start, it's probably a good idea to, paint a little bit of a picture as to where we're up to in 2021. It's been over 6 months now since, I guess, the first impacts of COVID were felt. It seems like it was a lifetime ago, and there's certainly have been lots of developments from March up until now. I guess one of the critical, time periods coming up at the end of September is that JobKeeper version 1 is due to expire, and that's going to impact a lot of the businesses out there in the broader economy, probably obviously with the exception of Victoria, but we're certainly expecting amongst our client base that most of our clients will cease to receive the JobKeeper payments after September, and that's going to create a little bit of uncertainty as to how the economy is going to be impacted once that JobKeeper money starts flowing. It's been an interesting period over the last 6 months. Certainly, if we cast our mind back to March and April, we certainly saw most businesses in the economy heavily impacted by COVID. But throughout May and June, most of those businesses have bounced back, not necessarily to their pre-COVID levels, but certainly close to it. And with the added benefit of receiving some stimulus money, what we've found across our client base is most of our clients, and not all of our clients, have been travelling okay. It feels that like in the last 3 months, it's been a bit like the phony war. We're sort of waiting. We've had the initial shock, and now we're waiting to see what comes next. And that's going to play out over the 3 months to the end of Christmas, with the first, the first issue being the end of JobKeeper version 1, and what impact that has in, the drying up of the stimulus money, what impact that has on the broader economy. In terms of other things that are happening, we're still waiting on a vaccine. There's been lots of positive talk in the media about the developments on a vaccine, but most experts are saying that we're at least 6 months, if not 12 months, away from a vaccine. So we can expect that we will be continuing in this holding pattern. Certainly for at least what we believe the next 6 months. That may change slightly over time, particularly in relation to the borders. We're seeing, again, it's quite obvious that our border to Victoria is closed, and we'd like our border to Queensland to be open. I suspect that there'll be again changes there in the coming month or so. There's sort of been indications from South Australia that they're looking at opening their border to New South Wales. And the Prime Minister's indicated that he'd like to have all borders open by Christmas. So that's sort of something that we could be working towards. And certainly the numbers out of Victoria in the last couple of weeks have certainly been promising. And it looks like they're bringing their situation under control. What we are finding is that the different markets and clients that are operating in different markets are going to recover at different speeds. We can certainly see the education sector, particularly the universities, have been particularly hard hit in relation to the international students, which they so heavily rely upon. Retail is struggling But again, the online retail of things, we're seeing some clients in that space with some really good results. Tourism, certainly, again, different sectors of the tourism market are working differently. Local tourism is going quite well at the moment, but those areas that rely on interstate tourists, particularly, are certainly struggling. What we're seeing in New South Wales and more particularly the local areas of the Illawarra and the South Coast is that the tourism side of things is going reasonably well at the moment because they've got a sort of a captive market with people not being able to leave New South Wales. So, they've had a tough time of it with the bushfires and the like at the start of the year. But from what we're seeing, the local tourism side of things aren't going too badly. Building and construction's another one. Again, what we're sort of finding with our clients is there was certainly a drop-off in inquiry in that April, May and June period in relation to COVID. Those inquiries have started bouncing back now, but with the building industry, there's a bit of a lag. So, right at the moment, there's a bit of a struggle in the building industry, but that's seen to be short-term as new jobs come online for those I guess those clients that put their building plans on hold due to the uncertainty earlier on in the year. With all that in mind, there's certainly some global impacts still playing out. Our relationship with China and China's relationship with the world itself has the potential to impact on our economy going forward. Tie into that the impending US election and the impact that has. So there's plenty going on in the world at the moment. I guess if we were given the opportunity to be where we are sort of 6 months ago, we probably would have taken it. I think we've sort of, as a state and as a region, we've navigated ourselves through this period reasonably well, and sort of look forward to things continuing to improve going forward. But obviously saying that with some sort of caution. So with that in mind, I'll hand over to Nick Fitzgerald now, who's going to have a look at initially some of the strategies post JobKeeper that businesses need to look at. So I'll hand over to you, Nick.
Thanks, Mark. Have I got control of the slides?
You don't, but I can flick for you if you like.
Thank you. So, look, we don't really want to cover old ground. We've done a few webinars over the last few months, some with quite a lot of detail around JobKeeper. I guess the purpose of today is to look at the strategies from a business management perspective that all businesses just need to be looking at, and probably going back to some of the basics that clients who've been working with us for quite a number of years will have heard us talk about really consistently. What we've got here is just probably a refresher of some of the strategies that Garry in particular has covered off in previous webinars, whether it's sort of hibernation or pivot strategy, looking at your automation. We've spoken at length about cash war chest strategies, but now looking at saying, well, regardless of which of these strategies are implemented, what are the things that we need to do from a business management perspective to make sure that it's successful? So with that in mind, I might get you to just skip forward, Mark. And look, this is, I guess, a phrase that Garry coined many years ago and has been a cornerstone of our advisory side of the business for a long time: measure, monitor, manage. And really what it refers to is the measuring of your financial information. So your Xero or QuickBooks file, you're getting the data into your file. The monitoring being the reports that you're actually generating to give you the information. And then the management side of it. What are the decisions, what are the processes we've got, and what are the decisions we're able to make out of that information? And what we're seeing now is that it's more important than ever. And it's more important than ever to make sure that the information is reliable and up to date, because we need to be able to make quick decisions. And so looking at ways that we automate the entry of that information, making sure that we've got robust reporting processes, and also meeting and decision-based processes. So just as an example, the ATO are basically saying that we need to lodge our September quarter BASs in order to confirm eligibility for JobKeeper 2. So that, JobKeeper 2 starts from the start of October. The first lodgement is at the end of October. But that really does mean that we need to have that up-to-date information a whole lot quicker to be able to prepare the BASs this quarter. And then I guess these days as well, there's the difference between real-time reporting or a delayed basis. So what are the mechanisms that we're using to actually measure our financial data so that we can make quick decisions? I'll just skip forward. Reassess, recalculate, and replan. Now this really is something that's come to the forefront since COVID. There's been a lot of replanning, a lot of reforecasting. We've done a lot of work with a lot of clients regarding in relation to cash flow forecasting. Businesses that have been shut down, understanding what their cash runway looks like. But now that we start to return to normal, but more importantly, as JobKeeper starts to, may stop for a lot of businesses as of really the end of this week, we need to really understand what the business looks like moving forward. How fast is it going to return to normal from a revenue perspective? What profit margins are we achieving? And what does cash flow look like as a result? And if we're no longer getting JobKeeper, but our revenue hasn't returned to sort of 100% or close to where it was, what does that mean to our cash flow and how long can we withstand that? So really knowing early when those key milestones occur that we need to make important decisions. So how long can we support the team for? Do we need to restructure our workforce? Do we really understand what our average monthly expenses and gross profit margin are so that we can determine break-even points? And just working on a regular basis to review the budgets and make sure that they're still accurate, because I guess what we're seeing is a bit of a moving feast of what likely business outcomes are at the moment.
Just before you continue there, Nick, if anyone does have any questions along the way, please feel free just to use the Q&A function in the webinar, and we'll try and answer as many of them as we can as we go.
Nick, just might provide some commentary around that too. A lot of people might say, well, what's changed, from where we were previously? We've always sort of measured, monitored, managed. I think where the reassessment, recalculation, replan comes in significantly is that, in my career, this is probably the most disruption we've seen in marketplaces for at least the last 30 or 40 years, probably even beyond that. And when you get disruption in marketplaces, you get disparities between supply and demand. And, economics would indicate we have disparities between supply and demand that would affect price. And people might say, well, what do you mean by that? And you've got to start to even think about some of the disruption in marketplaces, and property market's often one that people look at. And the more recent trends are Sydney property prices seem to be floating sideways. Rents in Sydney are falling. Whereas you go outside of the city areas, then you've got the opposite occurring. In Wollongong, property prices are rising quite quickly. People are getting gazumped on property. So unless you have your finance organised early and on site, you could actually miss out on a purchase. And they are all just reflections of disruption in the marketplace. And you might say, well, how does that relate to, how do you make business decisions? That's where it's really important to have a clear understanding of your numbers, because you need to react really quickly. In the past, we could probably, as accountants, provide you numbers that might have been 3 to 6 or 12 months old, and that would be used in making decisions going forward. Whereas now you actually need really current numbers, and even projected numbers going forward, to see what the trends are going to be, because you need to be quite nimble And one good thing about being a small business, you can be nimble and make decisions really quickly. And the disruption marketplace has meant that you've got to be quite nimble. So doing a reassessment, recalculation, or replanning your numbers is actually quite critical. Look at our business, and we've had to be quite nimble, and clients' need for really quick advice has become critical in regard to if they're looking to borrow money, getting information ready for loan applications would be quite important. So we've prioritised that work. So, that's affecting, and there wouldn't be one type of business that I don't, or one business or industry sector that I've seen hasn't been affected by the disruption of them in their industry or their marketplace. So that's where the numbers are really, the critical analysis numbers is quite important.
Yeah, I think that's a great point, Gary. One of the things happening at the moment is the economic environment is changing more regularly than we've ever seen because of what's happening with infection rates, border closures, et cetera. And so what you think the outlook may be at one moment in time could change pretty quickly. And even we sort of reflect on the building industry, as you just did, and it's been ticking along quite strongly, but there's an outlook for slower and lower population growth, which is going to have an undeniable impact on the demand for new property. So all those sorts of factors and the impact they may have leading forward just means that there needs to be that constant focus on where your numbers are.
Yep.
I just touch on that third point on that screen, Nick, about supporting your team. And one of those things around that, and by team, we're talking about employees. And one of those factors there is with JobKeeper ending, what I guess options employers have got, in relation to standing staff down and the like, post JobKeeper.
Yes, and I think we were having a chat about this yesterday, and Garry may elaborate further, but for those businesses, obviously when JobKeeper came in, there were the JobKeeper stand down provisions, and they've been extended as part of JobKeeper 2, but for those businesses that aren't necessarily going to qualify for JobKeeper 2 because they're no longer suffering a 30% drop, where they've suffered a greater than 10% drop in revenue, can still access those provisions on the basis that they've got a letter from their accountant stipulating that they have had that drop in revenue.
Yeah, so my understanding is there's been some adjustments to the Fair Work Act to allow employers to, I guess, still manage their workforce in a way that gives them sort of flexibility during an uncertain period.
Exactly right, and I think like everything, Mark, transparency really is the key there, so that you're having those open conversations with your team so that there's no shocks there, and I think that's often the best way to support them as well.
Probably other related matter on regard to the team side of things too is the discussion that's been more recent in regard to top-up payments and whether in JobKeeper 2.1 on the basis that some businesses may not really know whether they qualify until after they make their first pay in the 2.1 period. The prudent advice at the moment is for employers to stop top-up payments, given that those top-up payments can be made before the 30th of October. So just at this stage is that employers might look to take the opportunity to advise their employees that might be receiving top-up payments that they may be put on a hold until the business is able to confirm that they're going to be registered for JobKeeper 2.1.
Yeah, so just to confirm that, it's those businesses that are looking to enter JobKeeper 2.0 and where we're saying, let's not top up our employees until we know we've qualified, and we've got effectively a month, the whole month of October, to make that assessment. And as Nick pointed out, the only real way that we'll know whether we qualify is when we prepare our numbers for the BAS.
Might move on, Mark. Death and taxes, two certainties. And really just looking at taxes here, and we'll touch on, I guess, death side of businesses a little bit later and how we plan for that. But the one thing that we're very mindful of, and really thinking back to post global financial crisis and the ATO's approach there, is that at some point ATO debts will become payable again. So the amounts that have been put on hold by the tax office, what we're really cautious of is that businesses don't plan to not have to repay that money. But their cash flow forecasts, their rebudgeting, their replanning is all taking into consideration the fact that there could be significant ATO debts that will need to be repaid. And on top of that, there'll be all the ongoing quarterly BASs, annual taxes, and there really is no surprise around when they pop up. So just making sure that that's always at the forefront of your mind. And one of the, quite a lot of our clients utilising the cash war chest strategy, whilst they've got ATO debts that have been accruing, they have been, they've planned well enough that they've got a similar amount of money sitting in the bank account ready to repay it, but holding on to that at the moment because there is no interest being charged by the ATO, and just making sure that they don't part with the money earlier than they should be in case they do need it down the track.
Sorry, just some insight there in the approach that the ATO's taking at the moment. As you mentioned, Nick, part of the, I guess, the support for businesses during COVID was this interest-free period with debts to the tax office, which ended on the 14th of September. As part of that, we've been working with a number of clients and liaising with the ATO and looking at making some payments, so taking that money out of the war chest and sending it off to the ATO. The ATO have been quite reasonable, probably more reasonable than what we would have anticipated. And, for a number of clients particularly with large debts, we've been able to extend the interest-free period out for 3 years and have those ATO debts paid off interest-free over 3 years, which is extremely generous and probably not something that we'd anticipated would have happened. So they're not requiring any upfront payment as part of that, which is normally a requirement of theirs. They're not requiring any cash flows or anything like that to prove that we can make the payment. So for those clients that do have a significant ATO balance, it might be worthwhile making contact with the ATO, or certainly making contact with us so we can contact the ATO on your behalf and organising one of those payment plans whilst the ATO are giving them away, because it's effectively an interest-free loan for 3 years, which is quite attractive. The real key part to that is we don't want to see clients default on those payment arrangements. Because if we default on the payment arrangement, that effectively voids the arrangement, which means we'd have to go back and renegotiate. And it's highly unlikely that we'd get it on the same terms. So just be mindful of that the ATO is coming to the party at the moment. Now might be a good time to negotiate a repayment plan of those debts. And it allows you to maintain a bit of that war chest by paying off the ATO gradually rather than straight away.
And just for a bit of context there, post global financial crisis again, whilst the ATO were issuing or offering interest-free payment arrangements, the maximum term was still only 2 years. So it's more generous than what we have seen in the past, which is partly why we got caught by surprise. It's also more generous than the SME guarantee loans, which were sort of 3 years, really low interest rates. And this is a matched period of time. And what we saw was the SME guarantee loans were not very easy to access at the best of times. So some very generous terms from the ATO.
Yeah, and it still requires discipline from a client's perspective. I mean, just because we're paying off the ATO over a period of time doesn't mean that debt goes away. And we need to make sure that we're disciplined with our cash flow to ensure that we do have the money set aside to do that.
Absolutely. And And then I guess on the side of insolvencies, which I will touch on a little bit further later, but we probably are expecting that there to be a skyrocketing in the number of liquidations in the middle of next year. Pretty much once JobKeeper runs out, the government money runs out, the businesses that have survived really by their fingernails all the way along, at some point will need to fold. But and they're what I guess what's been referred to as zombie businesses along this period. Should they still have been operating or not? Probably expecting the ATO to be the biggest loser out of that, because a lot of these businesses will have been able to pay their suppliers whilst they're accruing ATO debt. But we really want clients to make sure that they're on top of who their debtors are, and that they're not caught out as well. So if there are any debtors that you're noticing are extending their payment terms to you, or you're noticing something happening in their industry that could mean that they become an at-risk business down the line, we really want to act early to try and make sure that we're able to get paid. And I guess one of the things with the ATO deferral of payments is that they're putting themselves at the back of the queue. So we need to be chasing that money now so that we're not caught out, because that will have the biggest impact on our clients' business and ability to continue as well.
Just before we move on from there, just a comment from one of our attendees on the webinar, Ian Jervis from Paradigm Home Finance, just made the comment in relation to those ATO payment arrangements that the banks will be factoring in those arrangements when they're looking at serviceability of loans and the like. So that's something to consider as to whether or not you take on the loan as opposed to taking on the payment arrangement as opposed to paying the debt out. Ian, no doubt, Ian's joining our panel next week, so he'll be able to give us some further insight into what the banks are doing in relation to those types of issues. So thanks for your comment there, Ian.
Data-driven decision making. Now, this really is, I guess, the next evolution of business management, and it's something that I've taken a particular interest in. But really, what it's about is saying, well, up until recently, businesses have had access to their accounting data. For a long period of time, that was always historical and done sometime after the fact. Now, the data entry process is getting more and more real time, or is real time. But what's happened now with businesses is that they've got a whole lot more data at their disposal, whether it's third-party operating systems, point of sale, other third-party software that they connect to, they use to run their business or connect to their accounting files, can now be used to actually get real-time reporting out of, to give really valuable insights to what's happening in their business. And what we're seeing here is the best performing businesses are already doing this. They're no longer making decisions based on gut feel. They're using the information and the insights at their disposal to make really strong, fast decisions. And look, I'll put down here really understanding who are your customers, where are they from a geography point of view, what do they buy and when, how often, what products have the best profit margins. But one of the I guess real world examples of utilising this data to make important fast decisions really is what's happened with governments and COVID. The information they've got at their disposal to determine what the rate of infection is, where infections are moving from a geography point of view, what they need to do regarding border restrictions and lockdown and all those sorts of things. They're using similar data to that which every business has at their disposal to make daily decisions. And from our perspective, that really is the next evolution of business management. And it starts to border on that predictive analytics space as well. So I guess we'll touch a little bit later about automation, automating your business processes. But through automating your business processes, it also gives you a lot faster access to the information that you're collecting every day. And a lot of people don't even realise they're collecting it.
Yeah, Nick, just to elaborate a little bit further on that, just that, just recalling some of the meetings I'm sitting in more recently, and a lot of this area of the data and analysis might have been the domain of sort of the larger businesses in the past, but I'm sitting in meetings at the moment, and some of the reports I see is on customer feedback. The series of customer feedback through the last month, both positive and negative, measuring those trends, understanding what the customer feedback's, the quality of that, what customers like, what they don't like, all that sort of information is part of that access to data that's now accessible to smaller businesses because of the use of technology. Now, one thing that's quite evident is the businesses that are using that data and that sort of feedback from customers are getting outstanding results because they'll be able to provide a service offering that's very in tune with what the customer needs are at the moment. And where that's become even more critical under this sort of disrupted environment is we've all seen how we're doing things differently and how our needs are varying. So the closer you are to understanding what your customers' needs are, what their buying trends are, the more quickly you can react. And that's played out in significant outcomes for a lot of businesses.
Absolutely. And I guess even one of the things I saw yesterday when I was doing a bit of research into another technology option, software option, was that it will flag the business owners or key people in the business as soon as there's an email received by any of the team members that has negative sentiment. And really just the power that can provide in the ability or the speed at which you can respond to your customers and the decisions that you can make off the back of that. It really has changed the game.
I think just to continue on the theme of customers there for a moment. Again, just some from feedback from what we're sort of by conversations that we're having with clients is that customers now more so than ever are looking for a safe experience. So if it becomes a choice, if I'm going up to Stockland at Shell Harbour and I've got a choice to go and have a coffee at 3 different places, well, safety is becoming a key driver in that decision making as well. So making sure that you're COVID safe and you've got the appropriate distancing and all of that stuff is visible. Because people will gravitate to places where they feel safe. And that has obviously over the last 6 months become far more important. So I think as business owners, that's, regardless of the industry that you're in, providing a safe experience for your customers has become more important than ever.
And I guess the other side of that safety, Mark, is safety in the brand.
Yep.
Customers are reverting back to brands that they feel they can trust at the moment, which does provide real opportunity, I guess, from a marketing perspective, which I'll touch on shortly. And Nick Donahue will elaborate in a few weeks in his presentation as well, but creates some real opportunities there as well. I might just move on. So if you just go back a step, Mark. So I guess this is just a little bit of an outline of the next 5 or 6 presentations that we'll be running in conjunction with some of our contacts. So we've touched on the presentation next week regarding finance facilities with Ian Jarvis. We're going to do a session on automation with Nathan Harper. We've touched a little bit today on automating business systems and the data and the information you get out of there. Marketing in a COVID environment is really critical from what we're seeing across our client base, and we just touched on the safety in brands and the important things for different businesses. Insolvency and asset protection with Ryan Bradbury. So what do we need to plan for and look out for in our business to protect us? And then some tax and legal compliance with Amy Harper from Kells. So that I think will be in about 5 weeks' time.
Yeah, I think what we've been able to do certainly over the life of our business is being able to give clients access to certainly a panel of experts in their field. We're quite open to say that we aren't experts in a lot of these areas, but we're keen to partner with people that are. So we're really fortunate that we do have a good panel of experts that we can call upon to assist clients in relation to a lot of these matters, which typically fall outside the general realms of accounting and business advisory.
Absolutely. And I'll get you to go through the next slide now, Mark. And look, I'll just touch on each of these areas pretty briefly because there'll obviously be a full presentation in the coming weeks. They'll go into a lot more detail by the actual experts. But from our perspective, these really are key areas that every business should be looking at in the current climate. And when it comes to the finance facilities, really considering some key questions. So we've spoken about the cash war chest. What is your current cash position? How much do you have in the bank and how much do you owe people? And as a result, what are the funding requirements for your business to ride out 2021 or even potentially longer if for your industry, the economic recovery is a bit slower? So what does your cash runway look like? So we've done a fair bit in cash flow forecasting in the past. With the existing facilities, can they be restructured? And in restructuring them, are you able to get access to lower interest rates or change your security position to give, or change the terms of your loans to give you better outcomes? And are you potentially able to release equity for future use? And one of the things we've seen across our client base, quite a lot of our clients are travelling pretty well at the moment. A lot of industries have performed really strongly through COVID, which was a bit of a surprise to us. But that doesn't mean that that's going to continue. And so for some of those businesses, what it really does is it can provide an opportunity to refinance and create a stronger position to allow them to, better ride out potential tough times down the track. All right, we might move on. Any thoughts there, Mark?
No.
No? Okay.
Continue.
Automation strategies, and this is a slide that we've used a fair bit in the past, just talking about some of the third-party apps that we are seeing clients using, connecting to their business software, their accounting softwares. But if we skip forward, really what it is about is automating any manual processes in your business to deliver more value to your customers. Really starting to say, how do we free up the business owners or the key people in the business to focus more on their business rather than working in their business? And at the moment, I guess what we're seeing is that a lot of businesses only have one chance to win customers. We talked about the safety in brands. So people are going back to businesses that they know they can trust. And a lot of businesses have used COVID period to take their business online, pivot their strategy, and automate. But if anything, what it has proven to us is that all industries can automate. And I guess the argument for change has been proven to a certain extent, that now is the time for change. And those businesses that have been quick to react have performed quite strongly, really have outperformed either the rest of their industry or the rest of the economy. And we only need to look at our business and say, well, where are the bottlenecks? There are multiple databases. Have we got touch points where we don't need to have touch points? And then saying, how do we apply that to clients' businesses? And who do we get involved to help them through that process? And Nathan Harper will present in a couple of weeks' time and really is an expert in automating business systems to create efficiencies. And he's done some really good work with some of our clients already in that space that the return on investment really can be quite significant.
Yes, in relation to that automation side of things is automating the sales process. And what we've sort of found, across the economy as a whole is that with people not being able to move around as freely as they were and they've sort of gone online for the first time and are now a lot more comfortable buying goods and services online. So it's important that businesses have a strategy for that, because it's actually that market of online sales, it has grown over the last 6 months.
That's right. And look, for some businesses, it's been as much as going from cash only to cashless. That's actually an automation. But for others, it's going online and saying, well, how do I sell online so that I don't actually need to have the customer interaction anymore? Really just thinking about any of the bugbears or inefficiencies in your business and saying, how do I get rid of it? Marketing. So not necessarily an area of expertise for me, but Mick Donoghue will present in a few weeks' time in this area. Mick does quite a lot of work with our clients with some really strong results as well. But really what we are seeing at the moment is that competition for sales or revenue has never been higher because everybody is struggling. And when you get into tough economic times, the reflex action to a certain extent can be to pull back on expenses, and marketing probably often being considered a really easy area to pull back on. We just really believe that that's not the right strategy at the moment for most businesses. That actually the opposite. It's more important that they're protecting their brand, they're making sure their brand presence is out there, that they're engaging experts and looking at new effective ways of marketing their business, whether that's going online, whether that's looking at niche areas within their industry that they can move into with little or no disruption to their existing business. And for me, certainly, I guess using the data at your disposal to inform and help make those decisions. And that's where Mick, I guess, I really think has been successful working with businesses, is using the information to make decisions about the most effective marketing strategies, as opposed to going on gut feel or what looks or feels pretty. Not sure if there's anything you want to elaborate there, Garry, but you in particular have done quite a lot of work with me.
Yeah, certainly you raised all the main points there. Certainly that you talked about the brand presence has become more important. It goes back to Mark's point about people looking for the safe option. There's been some studies done more recently. The consequence of that is that people are heading towards the brand. So having a brand recognition has become more and more critical. Certainly having a really strong online presence, and that ties in with the automation process. So that similar to what Mark had sort of indicated, that that whole transparency of the sales pipeline is really important, which is not only just automation's not just simply a technology solution, it's also a people solution too. It's a people capabilities. So it's important that the people in the organisation play a role in that automation strategy, so that it does make sure that the technology is used to the greatest degree to improve the customer experience. So all those things become more critical. And if you've got any question, the realness of some of those comments, you just consider how much you're using online yourself now. And when you get an experience online that's not smooth and isn't easy, it's really easy to check to go to the next option now. And most people are doing that. I mean, if you've got any uncertainty about the experience you're receiving for their online solution, there are just so many options available now. There's just a click to the next option. That's why it's really important to have that smoothness and transparency in your online solution. And certainly the next choice to a poor online solutions, not simply to walk around to the shop next door, it's actually go on to the next online solution. So making sure that you have an online solution in some form is quite critical. Okay.
I guess like me, a lot of our clients don't necessarily have an expertise in marketing, but I guess one of the core things about building a successful business is getting the right people doing the right things. And that's where we certainly promote getting experts engaged in that space. And marketing, again, is probably one of those areas that a lot of business owners have probably tried to do themselves in the past, but perhaps with not a lot of success. But now's the time to make sure that we get it right, and we can really set businesses up well for a strong future.
Yeah, and just one of the experience I've seen probably more recently on the marketing side, it's the business that instead of cutting back on their marketing, it's businesses that are actually increase their marketing budgets that are probably having the most material outcomes.
That's right. It all comes down to return on investment. There's no doubt that it's there at the moment. So moving on, insolvency and asset protection, and these two really do come hand in hand. And with a view that sort of in a few weeks' time, Ryan Bradbury will be talking about the insolvency space and what they're predicting in the upcoming sort of year or two. But I guess the important things are making sure that your business structure is sound. So where are your assets held? And making sure that they're separated from your key risk areas. So are assets being held in the same entities as your business? Because your business is a risk vehicle. And ideally what we want to do is separate that so that we've got assets over on one side and businesses over on another. And then, so whether we're doing that through multiple entities or whether we're making sure that the right individuals own assets, so that if something does happen to the business, those key personal assets that we worked really hard for are not necessarily in jeopardy. Understanding where you've given personal guarantees becomes really, really critical, especially in the event of an insolvency. And making sure that, because they are the debts that can pass through to you personally, as opposed to being wrapped up and liquidated with your company. So making sure you know where they are and having a strategy as to how to deal with them, whether they're refinanced some way, whether there's an alternative payment arrangement to look after them, or some other strategy, just to make sure that it doesn't end up with a personal bankruptcy alongside a business liquidation if we do get to that worst case scenario. One of the things at the moment is the statistics shows not a lot of businesses going into liquidation at the moment. And I think from memory, Gary, it was only about half of the normal rates. Is that right?
More than half. Was down to 60% below what they previously had been the same time last year. So,
and that's where, whilst there are a lot of businesses struggling, a lot of trying to fight through the current environment, and that's pretty typical of, I guess, a period of economic decline. But it's when we come out the other side that when economic activity picks up and those businesses don't, that they can't fight on any longer. And as we said earlier, there'll be a lot of zombie businesses that may fall over in the next 12 months. And I think the whole insolvency space is bracing themselves for a pretty busy period of time. But making sure that we're not, our client businesses aren't at risk to some of those other businesses falling over. And unfortunately, we saw quite a bit of that happen post-global financial crisis, where there'd be large contracts, for example, and head contractors would fall over, and then the trickle-down effect through all the businesses underneath was quite significant and dramatic. At the moment, there is a moratorium on insolvent trading claims. So that was due to run out pretty much about now, but it's been extended, I think, till the end of December. And really what that means is that directors are protected against insolvent trading claims through this period, but it's very important to be aware of when that moratorium runs out, so that you can make key decisions about placing the business into liquidation or not by that date if you need to, and probably coming and engaging with us before that so that we can understand the picture, where your business is at and what we might need to do. And then even engaging insolvency experts like Ryan be able to give some advice about what the picture looks like if that was to happen. The benefits of of planning and quick decisions that we spoke earlier at length about measure, monitor, manage, and reassess, recalculate, replan, and really having a firm grip on your numbers so that you know when these key milestones are approaching. Hopefully we don't have any of our clients in this position, but we do need to brace ourselves that may be an outcome. But if there are any other businesses that our clients know of who need that advice, I guess the message is to encourage them to seek it out early and make sure that they know where their numbers are. And then just wrapping up, I think the last presentation of our series will be around some of the tax and legal obligations. And I spoke earlier about the importance of knowing when your taxes are due and how much you owe. But I guess on the legal side, some of the key things will be lease agreements. The understanding that, especially at the moment, what is contained in your lease agreement. There's some of the rental code of conduct and how that may play into your lease. Whether there's personal guarantees that are included in your lease, which is highly likely, and what impact that may have depending on how your business is trading. Are your wills up to date? And that really comes back to some of that asset protection side of things, making sure we know where our assets are and where they may flow to. Shareholder agreements and franchise agreements, I guess at the moment, certainly on the franchise agreement side, there can be arrangements with franchisors where there's deferred payment arrangements, again, not dissimilar to rental arrangements. Making sure we understand the terms of those franchise agreements so that we don't necessarily breach them. We don't want to put our business at risk by not complying with the franchise agreement. And then insurance contracts. And I guess this was something that Garry and I spoke about yesterday. Understanding what is required within your insurance agreements. Because with some of the changes to COVID, it may be that businesses aren't necessarily operating in accordance with that. And really just making sure that you are still actually covered by your premiums. Is there anything you want to elaborate there, Garry?
Yeah, that's right. Probably a combination of things, I suppose. Is one, how, say, in regard to income protection insurance, claims might be altered based upon income earning of businesses at the moment. Some insurance policies that require businesses to operate in a certain way, which might, and they might be operating currently in a way that is outside their insurance agreement. So it's actually just contemplating, and particularly if you've got insurance brokers, getting an assessment from insurance brokers where there's anything in regard to your existing policies that you should be aware of, because events do happen during these times, and you wouldn't want to be in a position where you've inadvertently conflicted of some of your insurance terms to provide the insurance company a way not to pay a claim. So it's just an important thing. It's one of those contingency things that you need to probably contemplate in your business. And that goes up to a lot of the legal issues that Amy will address going forward, is just considering, as a strategy in your business, looking at your whole legal compliance issues to make sure that your business continues to be protected in the way, or that you comply with the legal agreements. So it's a worthwhile sort of taking a stake of how you're currently operating and making sure that you get the protection that you've sought to have through various different agreements. Yeah.
Just might probably just to give everybody just as Nick sort of alluded to, our seminar program to take us through to the middle of November. So we're looking at running further seven webinars, in this block. So I'd certainly would invite everyone to register for those. We can try and keep them again to an hour at 9 o'clock on a Tuesday morning. They will be available. The recordings will be available if you're unable to make the live webinar. And next week we've got Ian Jervis from Paradigm Finance to talk about the latest trends in in finance, and there's lots and lots of stuff going on in this space. So we look forward to Ian joining us next week to have a little bit of a chat about that. So I'd like to thank Garry and Nick for their time today. Certainly another insightful presentation, and there's certainly a number of things that we can all take away from that. So thank you everyone that attended today. If you've got any further questions, please feel free to get in contact with the office. We will be sending out some communication today on the JobKeeper 2.0. These rules have sort of been finalised now, so we'll be corresponding with clients in relation to the next steps regarding JobKeeper 2.0. So again, thank you everyone for their time, and we'll see everyone next week. Thank you.